What's up, investors? Ken here from Dyslexic Investor. We're going to be looking at Uber stock, but more intently, we're going to be looking at Jeremy, also known as the Financial Education Channel here on YouTube. He posted a video just here on how he invested $23,618 on Uber stock just this past week, and giving his positioning. He is more a fundamental trader. I do fundamental trading as well, but more on the technical side of things. So that being said, we're going to be diving in, looking at the different business models, technically, understanding the outlook, and then looking at a deep dive at the charts on how Uber has been performing on a relative basis to its competitors and the overall market. So first and foremost, before we dive into the understanding of Uber stock technically and then also fundamentally, and then looking at the different various markets, I want to give a quick shout out to Jeremy. He has been a fantastic YouTuber. He does fantastic work. I wish him all success. I just wanted to make this video on the backs of looking at more of a technical side of what this channel kind of brings with his flair of fundamental long-term investing, because I wanted to put the longer term look at it technically speaking. So let's go ahead and let's go check it out here. First and foremost, technically speaking, it's in a downtrend. That's no other better way to say it. You can see here on this line, it needs to break this line. This is a complete downtrend. We can go to this chart here. It's still steeping on a downtrend here. If you want to, again, these are not the most scientific, but this is a line and it has not broken above it. So this is continue to go down until it can kind of level off and continue to go higher. I honestly see it probably testing the bottoms again. The 25 level of not seeing that much potential for the company as we speak right now. So if we go ahead and look on the daily chart here, let's switch it to a weekly chart, because again, this only came out this past year, so there's actually not that much data. And you can see at the high of 47.08 and the low of 25.58. That's quite significant. So if we just draw a quick fib here, so the 50 percentile between the two would be around like the 36-ish level. So that would be a potential great bounce back within the next coming year. So if this is able to break out from this level here, I could see it easily going up to the 200-day. Basically, this 200-day is still falling with this, so that is indicating potentially still more downtrend. We just need these moving averages down here to kind of level off and break higher. And then I want to dive into some of the fundamentals with Uber Eats. So first and foremost, we're going to bring up this wonderful article here from the New York Times. This is basically just looking at the overall quarter they recently had. You can see here on the chart, which was a kind of a big kick down. So basically from 31 to basically 25 in 2 days. Yeah, so a $6-ish loss within 2 days, and kind of leveled off from that point. Had a double bottom here, and it's kind of popped up a little bit higher here due to a lot of people probably most likely bottom fishing on that particular point there. So let's go back here to the article. So Uber did have some very positive aspects to what Jeremy was talking about, was that it had 30% from the year earlier. So yes, it's still losing money of billions of dollars at that fact, and but it's growing. So it's not a completely negative. So if it was basically not growing or getting more market share, as they say, or if they're not being able to change the rides around to be more profitable. So majority of the rides, they do lose money on majority of the rides. That being said, you can also see here this is where the market share. So Uber said they had over 100 million customers in a month of the third quarter. So that's up 26%. What we said earlier, provided 1.7 billion rides and food deliveries. Just that's a lot. That's a 31% increase from the same period, so the year prior. That's good growth. This is a growth company, so we want things to be going up substantially in double digits level. It needs to get to center the market and being able to take from their provider of Lyft. So if we look at Lyftstock's kind of the same form here. Their last quarter in the end of October here didn't sell off as great, but it kind of has bottomed off as well. It kind of had the same little jump higher, but kind of sold off again. But this potential sell-off could have been with the overall market. But the thing is, the overall market, if we look up SPY, SPY has made a V-shaped bottom. You can see here that, we hit the high of 1127 and then came down beginning of December and then kind of popped up this week. If you go back to Uber here, this is not the case. This is honestly the complete opposite. Like, this is gone down substantially. So it's not a great sign technically. Fundamentally, it's a fantastic story on the sense of it's growing revenue, but it's still losing money. So that's kind of a kicker there. Then the other thing is their huge thing is Uber Eats. So Uber Eats is a huge component of what they're trying to become more profitable, grow revenues, and basically just grow the company. Due to this analyst, the economics of the food delivery platform is just terrible. So that's why you see a lot of people on Twitter, a lot of the analysts and people on CNBC are saying, get rid of Uber Eats, sell it to another company like a Postmates or Grubhub. You're just losing too much money if you want to try to work on becoming the #1 rideshare in the world. But they're saying they're losing over $3.36 on every order. Again, to put that in context, that's more on a lot of the promotions they're running. So a lot of things are discounted. They're paying a lot for advertising to get that out there. But the same analyst expects it to shrink to 46 cents per ride in 2024. All right. So basically 5 years from now, they're going to be able to lose about $3 or $2.90. That's if he thinks of all things go well. But Uber Eats is just such a huge competitor here. You can kind of see here on how the overall growth, year-over-year growth in quarterly revenue, it's a fairly stagnant. You can see here it's gone down dramatically due to the sense of all this competition. All right, there's just so much competition because the business is in the market with Grubhub and all the other various competitors. And this is, again, the revenues. It's kind of holding steady. Revenue doesn't mean that this is all profitable. This is just what they take in after all the expenses and all the taxes they have to pay on certain things. So you can kind of see here how Uber Eats is just a small percentage of everything here on its being able to bring in so much more, because they can charge a higher ticketed fee than taking a rider from point A to point B. The interesting part about that is we actually own Domino's for the fund, for the portfolio, and the CEO he expressed doubts about the viability of these delivery service models due to the fact that it is, what Jeremy also mentioned, very, very heavily funded by the VC firms 5-6 years ago, before Uber and Lyft. Well, Lyft doesn't do it, but like Grubhub is public, but like DoorDash and all the others, like ones you hear pop up, are still funded by a lot of VC firms. So, and that money dries up because there is unlimited money supply. That money will dry up, and whoever is left standing, if you're used to getting your bento box delivered to you at their front door, and you used to do DoorDash, but guess what? You still kind of want your bento box. You're going to want to get Uber Eats to deliver it to you. So I'm very optimistic on the sense of Uber can turn this stuff around, but it's very difficult to fight in this huge competitive landscape where it's just everyone's just trying to undercut themselves and trying to become the most profitable and so forth, of just trying to get the market share, because there's going to be some losers in this here. Another thing was Uber Freight. So Uber Freight is fantastic in the sense of it's basically, there hasn't been that many great adoption of this yet, but it is growing, so that's great. So the thing is, what I read that was fantastic was Uber Freight is allowing a better scale for drivers to have the drive across country within a very small notice. So there's this saying in the company, where was it at? It's basically called where the individuals are driving, if they drive from, let's say, California to Arizona, and then they have to drive back, and they don't have any goods in the back of the truck. So the way back, they're losing money because, of course, they have to pay up for the truck. They got to pay for the gas, and if they have whatever, all the taxes on it. So there's nothing on the way back. So Uber's kind of playing the middleman in the sense of that, of like, hey, actually, we do have some XYZ products that you can take back to LA on your way back for a fairly decent price. And guess what? We're not going to take a huge percentage out of that because we're still growing this business. So I find that completely fantastic on the sense of that. Basically this is how the app would look like. It gives you a complete breakdown from point A to point B, just like you would as an Uber driver, and these people can haul these freights from different various locations. They are doing a fantastic job partnering with a lot of large truck firms. They have a pretty big headquarters in Chicago, they said, and they're growing the job markets there. So that being said, like, Jeremy is taking, I think, a much longer term view. I would guess maybe 2-3 plus years for this to kind of to play out. I'm not seeing a potential to get into the stock right now, technically speaking. Most of the positions I hold are maybe 6 months to 18 months. So even that being said, I would not want to probably buy this until it gets to like 25, if I want to be technically sound here. So 25, but the thing is, a lot more volume has to come in. There has been kind of spiking up here with these blue teal lines, huge volume on this quarter. So you really flush people out here, because these are huge gaps right here. These little gaps right here. You see these little gaps right here? These are huge gaps that need to be filled. So that being said, these gaps need to be filled. We're kind of hitting a gap here in this point in time. I feel like this needs to kind of, these moving averages kind of need to level off just slightly. I definitely would take a bite-sized position when it hits the 25-ish level for a nice leveling off and potentially going higher. But that being said, if you want any movement out of this, it has to go past this wonderful imaginary line here on my charts here. This thing has to break through this, because this is going to be huge resistance going forth, and it's pretty more dramatic here on the weekly chart of it just being completely kicked. And a weekly chart can tell you so much more here too. It's because in the weekly chart you're not going to see a lot of the algorithmic stuff. It's not going to be, you're going to see more of a bigger picture side of things. Let's give an example. We can go look back at Lyft. See here as well as it's been a downtrend. Like everything, all these moving averages are pointing down. So they're not flattening, or they're not moving up to the right. So that being said, I would be very, very at ease at buying into this or investing into this as of right now. Again, you can never time the bottoms perfectly, and that being said, I'm really looking forward to how this plays out. I definitely have to keep my eye out on this stock and going forward. Again, Jeremy, keep up the great work. Love watching your videos. Guys, take it easy. Peace.